Hey, welcome everybody to the 40 Finance channel. My name's Jeff Beers. Today I've got some tech stocks that are under fair value according to Morningstar. And this is a pretty good list here because Morningstar typically is fairly critical of companies, and they take their analysis with like sort of a prove it approach. So they're definitely second guessing any sort of management comments on capital allocations, growth rate, moats, etc. And Morningstar is pretty conservative in their forecast. So when they call something under fair value, which is essentially their metric for the best time to buy, when they're saying under fair value, you have to open your eyes a little bit and say, is this a good opportunity? Because this is a company from an analysis standpoint that's fairly conservative. Reminder as always that my stock picks and projections, they're just my opinion for your entertainment. Please make sure you do your own research before investing. However, if you enjoy stock market analysis like this, going deep on tech stocks and many others, please subscribe to the channel, give this video a like. Thank you very much for all your support. All right, kicking things off with probably the most well-known stock on our list today, that is Microsoft. Morningstar gives it a fair value of $278 a share. And it's interesting for me because Microsoft didn't really come across my desk as necessarily undervalued. We look at the historical track record for their multiple. You got a forward PE of 30.96. That's less than last year, but definitely still ahead of some of the 20s that we've seen in the last few years. But if you go over to the analysis tab, you can see that this growth rate for such a large company is pretty impressive. If they hit their EPS projections, you're going 576 up to 777 to 835. And on the revenue side, you got 2 years projected in the double digits, 16% and 12%. All right, taking a look at TipRanks to see what the top analysts are saying about Microsoft over the next 12 months. Scroll down here. We've had several updates over the past 20 days. All of them are buys. We got a 20% upside, 12%, and 16% upside from the latest analysis. So we definitely have encouraging signs for Microsoft from the best analysts that it still has upside left over the next year, currently between, 16% and 20%. All right, next on the board is AMD, and this is another one that's kind of interesting because AMD sort of had a rocket ship ride last year. Their stock has definitely settled down over the past, 5 or 6 months, but you get a fair value of $101, currently trading just below $81. Taking a look at the historical valuations for AMD, today sits at $37.59 for the forward PE. Look back a couple years, and that's definitely cheaper from 2020 and 2019. Go back a little further, and it's more of a mixed bag. But keep in mind that this is in probably the best environment for chip stocks that we've seen in a long time right now, as demand has certainly outstripped supply. As far as projections go, year ago EPS, $1.29. This year, $2.17. Next year, $2.70 if all goes well. And you have a growth rate of plus 50% this year, and still more double digits next year. And I'll tell you what's interesting about this next year number for all chip stocks right now, and that is, I think honestly analysts are coming in low on their projections. There's sort of like this swirl that 2021 is an easy win for chip stocks, but then demand starts to fade a little bit. I have no doubt that it might go down some, but I think to make the assumption that it's going to go down as high as they're insinuating across multiple chip stocks, I think they've got the picture wrong, just to be frank. All right, on the TipRanks side, we've had a few updates over the past 25 days. The oldest coming in at a hold. The other three here, buy, 36%, 24%, and plus 44%. I gotta admit, I like AMD at this $80 price point. The only thing that would concern me with them right now is the fact that they don't manufacture their own chips. They outsource them, and you just have to keep a close eye on companies like TSM and just make sure that they continue putting AMD in a priority position to get their chips built. All right, next on the board is Salesforce. And what's interesting about Salesforce is they have started to upgrade their outlook in terms of earnings and revenue. You can see the Morningstar fair value of 273. Right now, today, you're trading at about 245. Looking at our historical valuations, forward PE today of 68.97. That's on par with what we saw in January, and actually pretty much on par with maybe the average since 2016. But you could make the argument that this 68.97 is a little bit higher. And one of the things that Morningstar could be factoring in is the recent upgrades to revenue projections that may not be accounted for here. All right, on the projection side, and this is where it got a little sticky for CRM this year. Last year they hit almost $5. This year at $3.81, some of that due to the cost of acquisitions. Next year you bounce to $4.32. But when you look at the revenue estimates, they're very strong, plus 22% and plus 19%. So the only thing that's really going against them is their profits are going to take a dip due to their investment in some of the acquisitions. All right, on the TipRanks side, we've got several updates over the past, call it 17 days. And you have mostly buys. I will call out there is a hold here with a minus 20% downside. But let's just say mostly buys with upside potential. Looks like on average about this 16%. You've got a high of 30% in here, and I'd say that this is the low at about 2%. All right, next on the board is ServiceNow. This is a sort of workflow automation and AI play for enterprise companies. And they're putting a fair value of 587 on ServiceNow. This one's trading at 503 today. On the historical side, we got forward PE of 91, and that's actually a little bit higher than we saw pre-pandemic. So with that, it appears Morningstar is factoring in more growth than the Yahoo forward PE is. On the analysis side, you got year ago EPS of 463, this year climbing to 551, next year into the 7s. And on the revenue side or sales side, plus 20% over the next 2 years. So very strong growth projections for ServiceNow. All right, on the TipRanks side, we've got just a couple recent updates. You can see some of the ones from last month. Everything's a buy at this point. The most recent analysis, though, that starts 10 days ago and 4 days ago, got a 20% upside and a 38% upside here. So certainly in line, if not exceeding, Morningstar's projection. All right, next stock on the list is Tyler Technologies. And this is an interesting company. I'll just show you real quick. They do payment and product offerings for public service. So whether it's paying your taxes online, paying your parking tickets online, community health, education, basically helping these public service sectors into digitization as well as digital payments and solutions like that. On the fair value side, Morningstar puts them at $475, currently trading at $433 today. Looking at the historic multiples, got a 64 on today's forward PE, definitely cheaper than last year, running a little bit ahead of the years prior to the pandemic though. From a projection standpoint, the consensus comes in at 552. That's the actual from last year. Consensus of 665 for this year, 782 for next year. And on the revenue side, plus 36% this year and almost plus 20% for next year. All right, looking at TipRanks analysts, we have several updates in the past 7 days. The first one, interestingly enough, is actually a hold. From there, you've got 3 buys in the range of 10% upside to 21% upside. All right, so there are several names in the technology sector right now that Morningstar has under fair value. And like I said, that's very intriguing because they are conservative in their outlooks, but we kind of confirmed it with some of the TipRanks best analysts, and they're sort of in line with what Morningstar's thinking. And you kind of have this world right now where almost everything in tech appears to be overvalued. So I think a list like this is really important to look at and kind of balance against the other names that you're looking at and sort of compare the metrics to see if stock A or stock B is indeed the better buy. All right, guys, let me know if you enjoyed this tech stock look at fair value. I can do the same thing for some other sectors like consumer cyclical, communication, stuff like that. So let me know what you think of this format. Happy to do it for other sectors as well. As always, thank you for watching. We'll see you on the next video.